Welcome to this presentation with BankNordik CFO Rune Nørregaard. My name is Mads Nørregaard. I'm covering financials for ABG, Untitled Chapter. With these words, I would like to hand the presentation over to CFO Rune Nørregaard. Go ahead, Rune.
Thank you, Mads, and thank you, ABG Sundal Collier, for having us. As Mads said, my name is Rune Nørregaard. I am CFO at BankNordik. And I will give the next 15 to 20 minutes, I will give you a brief introduction to BankNordik as an investment case. So if you could change to the next slide, please. Assuming we are on page 2, this is just a brief overview of BankNordik as a group. We are a banking and insurance group headquartered on the Faroe Islands. We service our customers on the Faroe Islands from a fairly consolidated branch network of only 5 branches. Our second market is Greenland. Where we service our customers through one banking branch in Nuuk, the capital of Greenland. We are around 230 full-time employees in the group as a total. And as I mentioned, we are not only banking, but we are also insurance. We conduct our insurance business on the Faroe Islands through 2 fully owned subsidiaries, one life and one non-life insurance company. And we also hold a small real estate broker service company on the Faroe Islands. Up until recently, we also had activities in Denmark. Relative to BankNordik's size, it was a fairly big business we had in Denmark, servicing private customers in the Danish market. But due to refocusing BankNordik, and also because we experienced increased interest from Danish banks in buying our Danish activities, we sold of the activities with effect from 1st of February this year to the Danish bank SpareNord. If you could turn to the next page 3, I just give you a brief status on the sales process in respect of the Danish activities. As I mentioned, the sale had effect from 1st February this year. So we had the earnings the first month of this year, and from 1st February, the Danish activities are owned by SpareNord. But due as a banking business is a technical business, the actual handover of the customers, the transfer from our IT platform to the buyer's IT platform, will not be effected before 19th of June this year. But everything is going as planned. And due to the sale and reduction in risk-weighted asset, we were quite well capitalized before the sale, and after the sale we are uncomfortably overcapitalized, if you could say so. And that's why we have announced that we intend to pay out an extraordinary dividend of 700 million Danish kroner during the coming next 3 years. If you look a little bit on the numbers, I have to say that the numbers that we are looking at in this presentation are, we have excluded the Danish activity. So it's only relevant numbers, also historical numbers for the continuing business on the Faroe Islands and in Greenland. Look at the P&L and actually also on the balance sheet compared to first quarter last year, we have a progress on almost every line. An increase in net interest income, fee and commission income, and also an increase in insurance income. Of course, we have to say that the first quarter last year, a part of it was negatively affected of the uncertainty surrounding the COVID-19 pandemic taking its first hit on the Faroe Islands and Greenland in the beginning of last year, March. So it was the last part of the first quarter last year was negatively affected by COVID, the uncertainty surrounding COVID-19. Of course, when you follow the profit and loss all the way down to profit before tax, we are quite a bit better this quarter than we were last quarter, and that's due to the one-off income from the the sale of the Danish activities. We managed to sell off the activities at book value plus a goodwill of above 250 million Danish kroner. Sadly, we have to compensate our IT provider for lost turnover due to the sale of our Danish activities. So the net profit that we booked in first quarter is just a little bit below 80 million Danish kroner. But still, we're quite satisfied with the sale and the price that we managed to obtain from Spanor. If we look at the key metrics for based on the first quarter, cost income wise, we are still a little bit shy of our long-term goal of 55%. We think 55% in cost income ratio for the type of bank that we are, then we are quite an efficient bank, and we're getting there. We're not there yet, but we are on our way. We have approximately 61% leaving first quarter this year. Looking at the return on equity, we have a goal going forward that we would like to be able to return around 8% or better after tax on our capital. A little bit shy of that at the moment, but you have to factor in that we are heavily overcapitalized at the moment. So of course, a extraordinary dividend of 700 million would improve on that metric. Capital-wise, well, I've said it a couple of times already. We are quite comfortably in place there. We have a long-term goal going forward of CET1 ratio of 23% and total capital, including the MREL requirement of a management buffer of 33%. If we could turn to the next page, that's page 4. Looking at our equity story, the headline is focus on improving customer experience and efficiency. And I would like to start up to just shortly describe our two main markets, because we are in a quite unique situation. We operate in two fairly, not completely, shielded markets. On the Faroe Islands, where we hold the market share of approximately 40% in the banking market on the Faroe Islands, and in Greenland we have a solid market share of above 20%. Going forward, we do not have a growth strategy for the Faroese market on the banking side. We think we have the size that we would like to have here. So we will just grow with our customers and in the economy in general. But in the Greenlandic market, which is an interesting market to do banking in, we would like to grow to take market share over the coming years. When it comes to insurance on the Faroe Islands, we also could see a benefit in taking some market share in insurance. And for both markets, in respect of pension and investments, we see quite a bit of an upside if we could take market share in these fields too. So we operate in quite interesting markets to do banking and also insurance in. The way we approach our markets is we have a strong focus on the customer experience and delivering what we are good at, and that's providing our customers, private as corporate, with plain holistic advice on finance, investments, and insurance and pensions. And besides doing that, we know that the way forward is not only doing business as we always have, but we have to have a more digital approach, not only the digital approach towards our customers, but also an internal digital approach in order to be more efficient, in order to meet our cost income target of 55% or lower. Being a large player, a significant player in two societies as the Faroe Islands and Greenland, it's quite obvious that we also need to have a goal or approach that we positively contribute to these markets. We do not want to exploit them. We want to contribute positively to the Ferris society and also to the Greenlandic society. And the way we measure that is we have starting measuring and also making publicly available certain ESG targets and numbers. But if you look on our key stakeholders, customers, employees, and shareholders, on the customer side, we have a strong focus on improving the customer experience, and we have a overall target on net promoter score of above 40%. It's actually quite high for banking. Usually banks are lower than that, and we are also at the moment, but we have a firm goal of improving the customer experience to be best in class when it comes to customer experience. Also on the employee side, we would like to have satisfied employees, and we do have, but there's always room for improvement. And then we have also a firm focus on that stakeholder. When it comes to the shareholders, I mentioned the key targets: return on equity, 8% after tax or more, of course. Cost income 55% or lower. Dividend payout ratio going forward of 50%. Supplemented with the share buybacks when that is possible. On the capital side, we like to reduce our capital, so we have a CET1 ratio of approximately 23%, and total capital, including the ML requirement of 33% going forward. But as I mentioned, in respect of the positive impact on the societies that we are a part of, I could use a couple of minutes explaining what we do. If you turn to the next slide, page 5. As the headline says, we have an increased focus on ESG and on sustainability, and integrating sustainability as part of our business. And we truly believe that that's not only just something you have to do because certain public interest require us to do. We think that this is a common goal that we share with not only our shareholders but also our customers and our employees. So sustainability and conducting a sustainable business is something that we have a quite tight focus on going forward. And the old simple truth of what you measure is what you get also seems to be valid when it comes to ESG, and therefore we, with the annual report for 2020, we started disclosing certain ESG numbers, and including CO2 emission, both direct and indirectly. And we set a fairly ambitious target of reducing these kind of emissions. On the social side, we have a focus on improving or having no gender gap, a even distribution between the genders, both on the manager side, but also in respect of the composition of the employees in each department. In respect to the latter, we are a little bit behind. Some departments have an overweight of men, some have an overweight of women. But actually, if you look at the numbers going out of first quarter this year, on the manager side, we are almost spot on, 50-50 between men and women in management position. We are quite happy with that, and aim to keep it that way. We also develop a few number of called as green products, where we give a discount on the interest rate if for loans provided for electric vehicles, or if our customers are getting rid of non-sustainable energy supply for heating to a sustainable electrified heating system, and so on. And we will have that focus going forward to make sustainable, to make sure that sustainability is also a part of our product portfolio. If we turn to page 6, sorry. Going from the overall ESG numbers and diving down into the traditional numbers for banks, impairments, I'd like to just give you a brief understanding of the soundness of our loan book. In the upper right-hand corner, we've shown the reversal of impairments that we have had the last many years. Actually, we should go all the way back to 2014, the aftermath of the financial crisis, before we could actually see a significant number of impairments. And actually, in the following years, we have reversed more impairments than we did back in 2014. We have a slight impairment in first quarter this year, but our expectation for the full year is still a very low impairments, and that's saying something about our customers are quite able to repay the loans that we provided to them. If we look at the corporate side, we also have quite a good diversification between the different sectors. No sector comprised more than 10% of the gross loans in the loan book. And if you look at the private side, almost all of the private loans are first priority mortgage loans provided to Ferris homeowners. So they are well covered by security. And you can see here's also a fairly low loan to value on these loans. So the loan book quite sound and quite well diversified, and we have good collateral from our customers. If we go to page 7, another important number for a bank is, of course, the capital position. And as I explained, we are, you could say, uncomfortably overcapitalized at the moment after the divestment of the Danish activities. You can see up in the right-hand corner, if we include the result for first quarter this year, including the one-off gain from the sale of the Danish activities, and if we include the upcoming improved legislation on capital we should put aside when providing loans to small and medium-sized enterprises. This is the so-called quick fix regulation that was put in place in Denmark. I think it was June last year. Not a quick fix for the Faroe Islands. It was a little bit lengthier process, but the relevant authorities and the Faroese legislators are working on putting these regulation into force on the Faroe Islands too. And when they're put in force, combined with the result of first quarter, actually we lift our CET1 ratio up to 33.7. And we intend, as I explained, to reduce. We have a goal going forward on the CET1 ratio of 23%. So we intend to pay out a dividend of extraordinary dividend of 700 million. We plan to pay out the first last part of it, 450 million, in the second half of this year, and then the last part during the course of 2022 and 2023. Of course, before paying out, we will take due consideration to the guidelines and approvals needed from the relevant authorities. If we turn to page 8, I will just end my presentation just giving a brief insight in the impact of the COVID-19 pandemic on the Faroese market and the Greenlandic market, or or those two economies. So if you turn to page 9, the Ferris Economy, as you can see on the GDP growth rate has been quite high, quite steep in recent years, and we actually expect a true V-sized recovery after the COVID-19 downturn that we saw in 2020. We actually expected the growth rates already this year, and back to more or less normal in next year. So a quite swift recovery is expected for the Ferris economy, and it was not that deep a downturn that we saw. What has affected us most is the reduced prices for export goods, where the primary export good is breed salmon, and followed by mackerel. And we see a little bit of a downturn in prices for these two species, driven by COVID-19 and the situation primarily in restaurants throughout the world, that they're not open for business, and therefore, of course, they don't need the product. That has pushed the prices a little bit downwards. There's no trouble in selling. It's just a matter of selling to a reduced price. But anyway, if you look at the unemployment rate, of course, it took made a little pike first half last year, where everything was in lockdown, also on the Faroe Islands, but it has fallen to a low level already, and not as low as before the pandemic, but still at a very low level, and virtually there's no unemployment on the Faroe Islands at the moment. Population is still on the rise, and that's also has been a contributing factor, along with, of course, lower interest rates, to the increasing housing prices on the Faroe Islands. Of course, this is something that we monitor quite closely, but we do not see a sign of a bubble yet. But of course, if prices are keep increasing at the pace that we have seen last year and this year, that could be a early warning sign of a starting housing bubble on the Faroe Islands. Turning to the last page, Greenland, same picture, but instead of salmon and mackerel, it's shrimp and halibut, two other, you could say, species that have affected the Greenland economy negatively due to reduced selling prices. But we see the same picture in Greenland as we see the Faroe Islands. They have been fairly shielded from the negative consequences of COVID-19. I think my time is about to be up.
Yeah, thank you, Rune. And I just have we have a few minutes for questions here, and I think I better start with the distribution, since these are, the size is very significant with 46% of the market cap, and you have different tax rules across your investor base, so it has become a bit of a hot topic. When do you plan to inform about the type of the distribution that you are going for? Dividends versus buybacks.
Well, our plan as the world is at the moment is when we make public available our half-year results, we can inform the market on how we plan to handle this distribution. But as you say, there's a lot of factors going on, and of course we wanted to do it in the best way possible for our investors. But of course we have to take due consideration to the opinion and guidelines from the authorities, both the Danish and the Faroese.
Would it be possible to choose a model where you could have an initial reverse tender buyback auction and then have an extraordinary DPS flagged and paid after the buyback? Would that be a possible scenario?
I think we haven't fixed ourselves on a certain scenario yet. So at the moment, every scenario is impossible, and of course we would take due consideration of what kind of model would suit our investor base the best. But we haven't made a decision yet. No.
Okay, but you are kind of focusing on the different preferences and.
Yes, we have that on top of our mind when we talk about distribution. That there's different ways to do that, and some is more beneficial. Some ways are more beneficial for investors than others, and yeah, we are aware of that.
Okay. Yes, and finally, is there any news on the possibility of the Faroe government exiting its 35% stake?
No news has been, no discussion has been about that topic, at least as far as we know. Of course, we do not know more than the general public know, but there has been no signs and indications whether they want to exit or not, actually.
Okay, so still politically uncertain outcome for that one.
Yeah.
Yes. Great, Rune. Thank you very much. In the interest of time, I think we have to end it here. But very good presentation. Thank you.
You're welcome. Have a nice day. Thank you.
You too.